Hello, everyone. This is Joshua Hayes at BigWaveTrading.com with your 11/24 market wrap-up for you to use on 11/25's market. Let's go ahead and start it off with the S&P 500. I want you to notice something on today's rally. Do you notice that it didn't close at its high of the day, that it pulled back a little bit into the close and finished well off the highs? Do you notice how volume was lower than yesterday? A 6.5% gain, and you don't close on your high of the day and volume's lower than the day before, has all of the signs of a holiday short covering, slightly oversold market bouncing higher. If the week goes on, I would assume if we would rally on Tuesday, Wednesday, and even on Friday, each day we're going to have lower and lower and lower volume, and it'll probably put us right back to the 50-day moving average. So before you go out there and calling a bottom after the 13% move in the S&P 500 the last 2 days, don't forget that this has happened before. And other times that you've called the bottom in September, middle of October, end of October. Here on November 13th was the bottom. I guess we have a bottom again. Well, folks, I'm here to tell you that for as long as this market stays below this white and purple line, the 50 and 200-day moving average, and cannot close above either line and sustain those closes, there is no way any of us should even be considering going long this market. I don't care if you even think that there's a bottom. Before stocks can even begin to start to move higher, they have to complete bases. They have to set up properly. The supply and demand ratio has to be perfect before they can rally, continue to rally, and do so without stopping. To get a big, huge 100, 200, 500, 1,000% gain move without the stock dropping below the 200-day moving average, you've got to get a long enough setup and a proper base with all the sellers washed out so that as it moves higher, people don't take excessive profits crazily below the 200. Instead, as it moves higher, it finds support via the mutual funds that want to get along. We are far away from these days. Right now, I'm still getting, even after today's rally, I have a new short. Granted, the shorts that I've taken the past week are almost all failing, which is why I've told you to keep these shorts small. Because we are so extended from the highs in October that it's just stupid to get extremely heavily short here. We're going to need a low volume rally like we're getting now, because it obviously wasn't capitulation on the S&P 500 if volume was below the September and October lows. So anybody that thinks that we've had a capitulation bottom on Friday is way off. So I just want everybody to remember that we've seen higher volume on the lows before and still haven't gone on to rally. So I don't know why this would be anything different, especially with the big, huge moves. You don't see huge, gigantic moves like this on a real accumulation day. It happens slowly over time at a 3 to 4% increment, not at a huge boom, boom, 6%, move right off the bottom. You don't see that. However, in the next 2 to 3 to 4 days, I'll be looking for a follow-through day, and hopefully some more stocks will show up. We do have some showing up, but still, bottom line is bleak. Let's look at the Dow Jones Industrial Average. Same thing. I love to see the green bop again. Last time we saw the green bop, we only sold off, 25%. That's it. So last time we saw the green bop, it was 25% sell off. Who knows how much it'll be this time. Bottom line is still below that 50 and 200-day moving average. Downtrend is still in effect. Weak close today. Lower volume. Watch your butt. It's not safe. Volatility index down to 64, right at the 50-day moving average. Until it breaks below that, I'm not going to be confident that we're done going on to the downside. It's going to have to break the 50-day moving average before I can believe a rally can actually hold. United States dollar. Yikes. This is the first I'm looking at it. That's not good. Okay, that's not good at all. I did not expect to see that immediately today. I was not ready for this. So now you're getting a fresh perspective of a experienced investor being a little shocked here, as it looks like hopefully Peter Schiff isn't right already. I'm not long the dollar personally, but since it's 250-day moving average and breakout in August, I thought it was only getting stronger and stronger. This is a little depressing move today, so now I want to go ahead and look at gold. Gold up another 2% today. Gold continues to do what it's doing, get above the 200-day moving average. I want to show you a stock I was short and had to fully cover and how it's looking now, our gold. It's looking pretty bullish now for gold scenario. So if you're long the dollar from the flag breakout, which is risky, but I still thought legitimate, gotta sell at least half. Gotta get out of half, 50%, 66% minimum, and then rethink things as it pulls back to the 50-day moving average. Let's go and move on, though. NASDAQ 100, another big up day. 2 days up 11%. Lower volume. In fact, volume was below the 50-day volume average today. Not good. Let's look at the NASDAQ. Same thing. Let me look at the volume. Below the 50-day volume average. Not good to see this as the next day. You want to see big volume like in September and October to even believe that it possibly could be a bottom. It definitely, in my mind, can't be a bottom with the kind of volume that we see. I want to see how much time I have left here. Good, another 4 minutes. So let's go and continue on. S&P 600, an amazing 13% rally also in 2 days. Lower volume again. Same with the Russell 2000. But you see still how far below the 50 and 200-day moving average we are. I mean, we're in a severe downtrend. I mean, there's no end to this anytime soon, I wouldn't think. I want to also take a look at silver. It's bouncing up too. And then I know I don't want to take a look at this, but here it goes. Man, it's a heck of a jump right there. It's a near 10% jump on oil alone, and that puts it near the $55 level, 54, 55 according to this here, but I thought it touched 55 today. That must have been on a different futures contract. Either way, that's a big move in oil and a big move in gold and a bad move in the dollar today, and that has to go with stocks rise. So I don't know. To me, no way there's a bottom. Hopefully this is just a short-term bounce, but oil might have seen the lows. Gold might have definitely seen the lows. And maybe the dollar has seen the highs. I really don't know. I don't play futures. I'm not interested in that. I stick to stocks, and stocks right now say not to do anything. So we're going to keep it to that. I told you where we are in the NASDAQ, S&P 500, Dow Jones. Like I said, if we continue to move on this week, I expect we'll rally each day as it's a holiday week, and I expect volume will be lower and lower and lower, and it will set us up for just a better position to short. And hopefully the dollar can turn back higher, because that's a bad move today. I did not expect to see that. And gold turning higher doesn't look good either. It looks like Peter Schiff might be right. Of course, he's only down 40% since his prediction, so take it at that. He got it right, just like Fleckenstein did in '98, but Fleckenstein didn't get any of the 1,000 to 2,000 to 3,000% winners that showed up left and right in '99. So take these things that people say with a grain of salt, because even though they're right, you can tell by the market performance they don't do very well. It pays off to not have any predictions and just listen to the market. So I'm going to go ahead and leave it at that. This is Joshua Hayes with part 1 of the market wrap-up for 11/24. I'll be back with part 2 after this. Have a great night.